Morning, guys. It's Monday, August 25th, 5:24 a.m. Central Time. Grain markets are mixed to higher this morning. December corn futures up 4 cents at 4.15 and a half. November soybeans down a quarter cent at 10.58 and a quarter. December Chicago wheat up 3.5 at 5.30 and 3/4. December Kansas City wheat up 2.25 at 5.23 and a quarter. December spring wheat is up a quarter cent at 5.90 and a quarter. Pro Farmer had national crop estimates out following its crop tour on Friday. Why don't we start there?
So, after surveying crops across 7 states, the tour projected the national corn yield at 182.7 bushels per acre, with production at 16.2 billion bushels. The estimates were below USDA's forecast of 188.8 bushels per acre and 16.7 billion bushels. Soybean yields were pegged at 53 bushels per acre, with production forecast at 4.2 billion bushels compared to USDA's 53.6 bushels per acre and 4.3 billion bushels. The tour was highly variable, with exceptional crops in the Western Corn Belt while dry conditions pressured yields in the East. Scouts also noted disease concerns in some fields.
With regard to the U.S. corn crop, Pro Farmer much less optimistic than USDA. USDA's got the total corn production number at 16.74 billion bushels. Pro Farmer's at 16.2. So you've got a difference of more than 500 million bushels between the two estimates. In terms of the yield estimate in corn, you've got a 6.1 bushel per acre difference, which sounds very high. However, that sort of difference is not unprecedented. A couple of things here. So if you guys are watching these yellow bars, that's when Pro Farmer is below the August USDA estimate. So Pro Farmer since 2010, Pro Farmer has been below August USDA every single time except for in 2 instances. 6.1 sounds like a lot, but it's not unprecedented. We saw a disparity of 7.3 bushels per acre in 2022 and 6.2 bushels per acre in 2019. So what does that mean? What does that mean for the future? Pro Farmer is drastically below USDA. Does that mean USDA has to come down? In both of those instances, 2022 and 2019, yes, USDA did come down, but not by a lot. In 2022, USDA ultimately came down only 2.1 bushels per acre from its August estimate. They went from 175.4 in August down to 173.3 final. In 2019, same thing. They came down 2 bushels per acre, 169.5 August down to 167.5 final. So just because Pro Farmer is 6.1 bushels below USDA's most recent estimate does not mean that USDA has to come down by 6 or 7 bushels or anything like that. That's not I don't think past performance is indicative of future results here. My take on the crop and the market right now is that the market has figured out that this crop is not a 188.8 and it's not 16.7 billion bushels. I think that the market is starting to realize that something in the low to perhaps mid 180s is possible. But I think that anything over 185 is going to be tough to do. And I imagine that we're going to start to see some of this disease pressure and stuff reflected in the crop ratings at some point. I don't know if that's going to be this afternoon, but I think that people are coming around to the idea that these estimates in the upper 180s, even the low 190s, and there was some of that floating around, people are coming to the realization that that is probably not reality. If that's not reality, does that mean that the corn market's too cheap? Maybe. Depends on what happens with demand. We've seen phenomenal export demand. We've seen pretty solid demand for ethanol. Feed demand is kind of questionable, but a lot of that is going to have to do with demand. If we rally prices enough, does it shut off exports? I don't know. We'll find out. So this is generally speaking, I think, considered to be a positive input with regard to prices. The market's up this morning. Not a big rally or anything, but we're trading 23, 24 cents off the lows in D's corn. I mean, it could be a hell of a lot worse.
The EPA granted a number of biofuel waivers to small refiners on Friday. The agency granted 63 full exemptions and 77 partial exemptions, while denying 28 requests and deeming 7 ineligible. The decision caused soybean oil futures to jump by nearly 4% and boosted shares of renewable fuel makers and grain traders. The agency delayed a ruling on whether large refiners must offset exempted gallons through reallocation. However, it plans to propose such measures for 2023 and beyond. Biofuel producers warn that the lack of clarity on reallocation creates uncertainty in the industry and could suppress production this year, stressing that the EPA must reallocate every exempt gallon.
Okay, so they are granting a whole bunch of exemptions, which I don't like. I talked about that last week. How I think that a lot of this is nonsense. However, this announcement was considered to be friendly to the market. This was a buy the rumor and buy the fact situation in the soybean oil market. We rallied on the rumors Thursday. We rallied on the facts on Friday. People have the biofuel people have written novels about this and why it's such a big deal and how complicated it is. I'll make it as simple as I possibly can, and I'm not an expert here, but I'll explain this to you as if you were 5 years old because that's how I needed it explained to me. The announcement was considered to be friendly to the soybean oil market mainly because there were a whole bunch of RINs established prior to 2023 that are going to expire, and they're not going to be able to be pulled forward to meet obligations. And that's the reason why this was considered to be friendly, long story short. So this helped out the soybean oil market. It helped out the soybean market. It helped the corn market. The one market that just can't get off its ass is the wheat market, and it will not cooperate with the rest of our complex here.
China says U.S. protectionism is hurting farm trade between the two countries. The Chinese ambassador warned that farmers should not be the ones paying the price of the trade war. He pointed out that U.S. farm exports to China have already dropped by more than half this year, with soybeans hit the hardest. At the same time, Washington is placing new limits on Chinese land purchases, calling them a national security risk. China argues that these rules are more about politics than protecting food supplies since they own less than 0.03% of U.S. farmland. The fight could mean big missed sales for American soybean growers as China buys more from Brazil.
China is trade warring as we are, lots of back and forth rhetoric. And it is true that China officially has no new crop U.S. soybean sales on the books. There are a whole bunch of sales to unknown destinations. It's like 40% of the whole new crop book is to unknown. Could some of that be China? Yeah. I heard some chatter last week that maybe China was interested, and that has not been confirmed. The soybean market, despite China's absence, has acted pretty well. The November contract rallied 81 cents from the August low to Friday's high, and some of that has to do with the strength in the soybean oil market and this SRE stuff. A lot of it has to do with the USDA report that was released earlier this month that showed a drastic reduction in soybean acreage versus prior estimates. So the bean market has acted well despite the absence of China. Now, big picture, you look at this chart, and it's basically calendar year to date. Been very much range bound. We've traded a range of just a little bit more than $1 in no beans this year. That's a very small range for soybeans, grand scheme of things. So it's been a range bound trade for months and months now.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Fan favorite Jim Urio was on Friday. The government is our bookie, and that is as it relates to CME and FanDuel and how they're going to basically be doing like regulated bets on the exchange. It's kind of odd. In any case, Jim does fantastic work for us on investing, on interest rates, on the Fed, on all sorts of policy and tariff stuff. Super entertaining and informational every other Friday. Pete Meyer talked to us a couple different times from the crop tour last week, and he talked specifically about the Illinois corn crop on Thursday last week. He was not impressed, and he talked about why he was not impressed, the things that he saw in terms of crop problems and some of the specifics. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel it anytime. There's no other fee, no other obligation. Nobody will try to sell you anything else. If you're the decision maker in your farm operation, you need to sign up for this because the stuff that we send out is information that will help you to make decisions. We've got some excellent stuff coming up today. Paul Neiffer is going to be on to discuss the increase in crop insurance subsidies. And a lot of you guys may not even know that this happened. It happened last week. And Paul's going to give us some details. How much money are you going to save? It's fairly substantial. Check out that deal this morning, guys. Again, we don't want to sell you anything else. We just want to send you our emails and our videos every day. We do 10 episodes a week. We do 5 free on YouTube and on the podcast apps, but we do another 5 that are much more informational that go out to the paid crowd. So give that deal a shot. I will forward you a copy of this morning's email if you sign up early.
The funds trimmed their net short position in the corn market last week. For the week ending Tuesday, August 19th, large money managers were net buyers of 28,000 corn contracts. The net short position in the corn market is the smallest since late May. The funds were also net buyers of 24,000 soybean contracts and net sellers of 8,000 SRW wheat contracts on the week.
There was probably some additional short covering following Tuesday. Private groups are estimating that funds are net short in real time or as of Friday's close, like 95,000 contracts of corn. And they're estimating that the funds are actually net long maybe 10,000 contracts of soybeans, still net short a whole bunch of SRW wheat. But we're seeing some short covering and actually speculative buying in the row crop markets, which is interesting.
Fed Chair Jerome Powell signaled in his Jackson Hole speech Friday that shifting economic risks could warrant a rate cut. He emphasized that while the labor market remains strong and the economy resilient, downside risks are growing. He also cautioned that tariffs could slow economic growth while driving inflation higher, raising the risk of stagflation. The remarks sparked a market rally, with the Dow Jones rising 1.9% to a record high, the S&P 500 gaining 1.5%, and the Nasdaq advancing 1.9%. Interest rate markets are pricing in an 87% chance of a quarter point rate cut when the Fed meets in September.
Yeah, so they're going to go from a target range of 4.25 to 4.5 down to 4 to 4.25. And this is not hugely substantial for you guys necessarily in terms of operating lines and that sort of thing. It is substantial to the markets, though. I mean, the dollar took a bath and got beat up pretty good on Friday. Stocks rallied. People generally, in terms of risk asset valuations, this is considered to be a positive, I suppose.
We had a cattle on feed report come out on Friday. As of August 1st, cattle on feed totaled 10.9 million head, 98% of year-ago levels, and steady with pre-report expectations. July placements came in higher than anticipated at 1.6 million head, 3% above expectations, but still 6% below last year's levels. July marketings were reported at 1.7 million head, 94% of last year's levels, and in line with expectations. Traders may interpret Friday's report as slightly bearish as placements exceeded expectations. However, in the broader context, placements were still down substantially from last year and will likely continue to trend downward given the record low U.S. beef cow herd and restrictions of Mexican feeder cattle imports.
So this is still considered to be a friendly situation, lowest cattle on feed number in forever,
yeah.
for the most part.
For certain.
So nothing's changed here. Is there anything that you can imply on the report of, like people are always asking about this herd rebuilding question? Is there anything in the report that would tell you one way or the other?
No, nothing that is like, yes, this is for sure that we are for sure keeping heifers back. No, I mean, there might be a smidge of heifer retention starting to happen, but nothing substantial.
Did you see there was a case of a human who got screwworm?
Yes, I actually saw that late last night. It's in Maryland, I believe, isn't it?
I mean, that's not good.
No, it's definitely not good. That would be something that would negatively impact the market for sure.
All right, we had some flash sales Friday.
Yeah, we sure did. U.S. exporters sold 5 million bushels of corn to Costa Rica and 6 million bushels of corn to Spain for delivery during the 25-26 marketing year.
New crop corn export sales, absolutely fantastic. We're still competitive versus Brazil, despite the recent rally. Cattle prices on Friday did what?
They were higher. Live cattle were 97 cents to 315 higher. Feeders saw gains ranging from 397 up to 465. Fat cattle trade was higher last week. In the Southern Plains, cattle were mostly $5 higher compared to the prior week at 240. Up here in Nebraska, cattle were steady to $2 higher at 245. And then over in the Western Corn Belt, cattle also sold at 245, which was steady to $5 higher.
Outside markets, the Dow's off about 100 points. S&P's down 20. Treasury's off just a little bit. U.S. dollar's up a little bit. Crude oil is up 51 cents in the October WTI 64.14 last trade. Have a great day, guys. We'll be back on Tuesday.